Let me ask this question about the possibility of replacement cost accounting being adopted in, let's say, Australia or in Great Britain, conceivably in the body of the financial statements. Suppose this were done. What kinds of research studies do you think might be carried out in such a test market, in effect, that might provide some insight into whether we perhaps ought to go in that same direction, that would be useful to policymakers?
What we really would like to be able to determine is the relative usefulness of what we have now versus what we might have under some other scheme. And I certainly have no suggestions for what kind of research is going to reveal usefulness, even when that is being provided, let's say, in the UK or in Australia. Another set of information, though, not related to usefulness, that's terribly critical is the feasibility and the practicability, the implementation of actually determining these values. Now, at one time, we thought maybe we could look to the UK for that experience, but Sandy and his colleagues at the SEC kind of helped out in that regard. I think we're going to get some close-hand experience right here at home with respect to determining these figures. But I think that's a very important consideration. Before we can really decide how far to go with this, is that we need to find out what we can do.
And one of the things the Commission emphasized in adopting these rules was the fact that we knew initially there would be a variety of approaches used, and we encouraged experimentation. We even wrote what we thought was a safe harbor rule in so that people would not be as worried about experimenting with different approaches to data. I think that everyone knows that replacement costs are considerably more subjective than historical costs, simply because you don't have a transaction to go back to. I think we do have to try different approaches. We've got to try specific price indices as one vehicle. We've got to try appraisals, perhaps, as a partial device. We have to try other approaches that, re-engineering and costing out, which is a form of appraisal, perhaps, but slightly different. There are a lot of different techniques that can be used to develop replacement cost data, and I think we need experience with them. And the Commission has specifically said that it feels that it is appropriate for this experimentation to take place, and it does not hesitate to adopt a rule that requires data, even though it doesn't have a cookbook as to how it should be presented.
I hope it's fair to add that there really is a great deal of concern about the experimentation being reflected in footnotes of the financial statements rather than being conducted outside of the financial statements. And I say that because I've seen the letters that were submitted to the SEC in response to their proposal. And, we've been, Sandy and I and many others have been in enough conferences and discussions and whatnot to know that there's a great deal of concern about that.
Of course, the Commission basically rejected the arguments of the people who said it should be outside the financial statements, simply because we don't believe that the financial statements should take on the character of the tablets brought down from the mountain, where everything has to be guaranteed by the Lord before they go in there. And we see the financial statements as useful communication devices that communicate financial information about a business. And we are hesitant to require major financial disclosures outside the financial statements when they are directly relevant to the data in the statements. And there was a lot of discussion at the Commission as to how we should respond to these comments, and we finally concluded that while we were prepared to have the data labeled unaudited, we weren't prepared to have it said not to be part of the financial statements.
Yeah, when I said outside the financial statements, I didn't mean someplace else in the annual report, but I meant private information, private experimentation that could be shared with you and perhaps with us and others, really of the type that our field tests on purchasing power accounting used.
Let's talk a bit about general price level accounting. Sandy, 2 years ago in a talk, you criticized general price level accounting used in connection with historical costs as possibly affirmatively misleading, I think were your words. Do you believe that general price level adjustments, either in supplementary financial statements or in the main body of the financial statements, would also be affirmatively misleading or might be affirmatively misleading if prepared in conjunction with with replacement cost accounting in the body of the financial statements as opposed to historical cost accounting?
No, I think they might be very useful in that context. I wouldn't even reach a final conclusion that they wouldn't be useful when applied to historical costs, although I have my doubts. I haven't reached a final conclusion in that regard, but certainly in terms of providing information as to why current costs have changed, I think analysis based upon the degree to which there's been a change in general price levels as opposed to the specific assets the firm has is useful information. So I'm not at all troubled by the fact that companies should analyze and apply general price level techniques to replacement costs to try to explain one of the elements of change in replacement cost. Now, when it comes to general price level adjustments to historical cost financial statements, I think the reason I was concerned about the possibility of them being affirmatively misleading was because I didn't think that people would really be able to understand what a purchasing power unit was. I didn't think it had a clear enough meaning to people, and I was afraid that what they would think they had were value statements, even though in fact they didn't. That was the danger I saw. Now, once there is disclosure as to current replacement costs, that danger seems to me to be substantially reduced.
Bob, do you feel differently about GPO accounting in conjunction with current value as opposed to historical cost?
If anything, I think it might be more important to have accounting in terms of units of general purchasing power in connection with replacement cost than with historical cost. There are a couple of points that I'd very much like to make, and that is the degree of confusion that has existed with respect to the role of purchasing power accounting and replacement cost accounting and historical cost accounting. A great deal of progress has been made in the last couple of years, I think, in straightening that out, but we still hear references to general purchasing power accounting as being an alternative to historical cost. And if you'll forgive me, I think you made such a comment in your opening remarks. I don't think it's an alternative to historical cost. It is an historical cost system. What it is an alternative for is units of money. And if we can separate the controversy between historical cost and replacement cost, and the controversy between units of money and units of purchasing power, we'll have accomplished a great deal, I think.
I think this is what I meant to say in the introduction, but perhaps not clearly when I said to traditional historical cost, which would exclude those kinds of statements, but I think you have a good point.
Okay, one further point then. I think as you read articles and hear talks and comments, very frequently the criticism or concerns expressed about general purchasing powers are really criticisms of historical cost. It is a very common thing to associate with historical cost, but it need not be associated with historical cost. And as I say, in fact, I read an article just last night by an academic whom I have a great deal of respect for, but his criticisms really were about historical cost, not about using a different unit of measurement. And it's unfortunate that that gets mixed up the way it does.
Well, one criticism that's been made in recent years of general price level approaches is that general price indices are not indicative of the impact of inflation on any one user or on any one company, that these are fairly abstract notions, and if one wants to understand what the impact of inflation is on a user or a company, one has to really follow the market basket, the pattern of buying habits of that company or that user. And very broad gauge indices, even consumer indices, are too broad. Do you think that there's any basis for that comment, that criticism of a general price level approach?
Well, that's bound to be a problem, I think. I really think it's a problem with using units of money. It's one way in which, as I mentioned, I think using units of general purchasing power becomes even more important in connection with replacement costs, because then you have both the kind of the general effect of changes in the value of money together with more specific information as to how specific changing prices have affected a particular firm, that is, the assets or the transactions in which they're engaged. But there's not going to be any perfect unit of measurement, I don't think. When you think of the tremendous spectrum of transactions and items that somehow or other we summarize in that single measuring unit, now units of money, and talking about doing it either in units of consumer purchasing power or general purchasing power, That's a great deal to ask of any unit of measurement. And it'll never be perfect. And the problem is, is there a better one than units of money?
There are even a few problems when you just translate from one unit of money into another unit of money.
Indeed there are. Indeed there are.
What about the inclusion in liabilities, purchasing power gains on, inclusion in net income, rather, purchasing power gains on long-term liabilities? This has been a controversial question. Do you see an answer to this question?
It is controversial. I see an answer. It's the concern about it, I think, in some, probably the greatest concern has arisen in a specific circumstance, namely public utilities, where they tend to be highly leveraged, that is, have a great deal of long-term debt, and therefore the gain, the purchasing power gain on long-term debt tends to be large, particularly in a year like 74, where there was a very significant inflation. It doesn't really mean that gain isn't there. Now, I think in the case of the public utilities, perhaps the solution is the way in which the fixed assets, the plant, is viewed. It is not clear to me that in a public utility, where the regulatory commission will allow them to recover only the number of dollars that have historically been invested in the plant, is a non-monetary item. It is not clear to me that ought to be restated with that is restated and left restated rather than written back down to its current value. So I think that really is one solution to that particular problem, public utilities. You also hear comments to the effect, which is a comment I don't understand, but it obviously has a great deal of emotional attraction to those who make it, because it's very frequently made. It goes something like a gain in purchasing power, a purchasing power gain on long-term debt, will never be realized in cash and therefore can't be reinvested or paid in dividends. Now, I've worked out a lot of examples to try to demonstrate that isn't the case. I'm unable to work out an example that would suggest it is not related to cash, but it's, as I say, I therefore brand it as kind of an emotional argument that has no foundation. I would like someone to create an example to show why that gain is not related, just as much related to cash as any other accounting transaction.
And it's a real gain. I mean, I think there's no doubt that when you owe money in a time of rapid inflation, you are better off. And the Commission in its release did provide that companies might wish to make disclosure of the favorable impacts of inflation as well as the changes in replacement cost.
Bob, Sandy, on behalf of the American Accounting Association, I want to express my gratitude for a very interesting discussion. Thank you very much for both participating.
Pleasure to be here.
Pleasure to be here, Steve. Very good.